Welcome to Investing Talk Podcast. We're focusing on Hesai Group today. They've been making some serious moves in the market. You might have seen their stock, HSAI, going up quite a bit recently. And, well, we're here to figure out what's pushing this lidar company forward.
Yeah, there are actually a lot of things coming together to get people excited about Hesai. It's not just, market hype. There are some real changes happening that we need to pay attention to.
Okay, so let's break it down. Hesai stock, it's been doing amazingly well, like a 50% jump just on March 11th. And the volume, 27 million shares traded, like 7 times the average. People are definitely interested.
Definitely. And what makes this even more interesting, you have to remember the whole auto tires truck sector is down, 16.6% since the start of the year. But Hesai was already up 37.1% by the end of February, even before this latest jump. They're really going against the grain here.
They are kind of making their own path. What's driving the surge?
One of the biggest things is their new deal with Mercedes-Benz. This is a contract for several years where Hesai will be supplying lidar sensors for Mercedes vehicles, the ones with all the smart driving features. And get this, it's the first time a foreign car company is using lidar tech made in China for their cars all over the world.
So it's not just the deal itself, but what it means, right? For Hesai, it shows they can compete on a global level.
That's it. It could change things in the car industry because Hesai is showing they can be just as good, maybe even better, than companies like Luminar when it comes to keeping costs down and being able to make a lot of these sensors.
And speaking of doing well, we have to talk about Hesai's earnings report for Q4 2024. It was a record breaker. They shipped a massive 200,000 lidar units, a 182.9% jump from the last quarter. Their revenue hit $100 million, a 28.3% increase year over year. But here's the big news. They actually made a profit for the first time. $20 million net income. What do you think about that?
This is a big moment for Hesai. It shows that they're not just a promising startup anymore. They can actually make money from all this growth. That's a really good sign for investors.
And their gross margin, 47.7%, that tells me they're managing this growth well, which is important as they get bigger, right?
Oh, yeah. It shows their business model is strong. They can keep costs under control even though they're expanding quickly. And for investors, that's really attractive, especially for a company that's growing so fast.
Okay, so I've got great stock performance, a huge deal with Mercedes-Benz, and a strong earnings report. So what's next for Hesai? What should investors watch out for?
Well, they've set some ambitious goals for their revenue in 2025, somewhere between 3 and 3.5 billion RMB, which is about 426 to 497 million US dollars. Analysts think they'll stay profitable in 2025, predicting a net income of 136 million CNY, and the average price target for their stock is between $15 and $21.50. That suggests it could keep going up.
That's pretty amazing, especially when you consider their stock is already around $17 or $18 a share after the recent jump. But let's not forget the bigger picture. What does Hesai's success say about the lidar market in general?
I think it shows lidar is really gaining traction. It's becoming an essential part of advanced driver assistance systems and, of course, self-driving cars. Hesai's CEO even said he thinks lidar will be as common as airbags someday, like a standard safety feature in all vehicles.
And with Hesai already working with the big Chinese EV makers like BYD, Great Wall Motor, Li Auto, NIO, and XPeng, and now with Mercedes-Benz in the global market, they seem to be in a great spot to benefit from this trend.
They're also smart to move into the robotics market. That opens up even more possibilities for growth, because lidar can be used for so much more than just cars.
So for investors who might be thinking about Hesai, what do you think? What are the most important things they should be looking at?
Well, let's talk about the opportunities, but I have to say, this isn't financial advice. Talking to a financial advisor is always a good idea before you make any investment decisions.
Right. We always want to remind people to do their research and get professional advice.
Okay, so looking at the short term, Hesai's stock has been, on fire, and this momentum could keep going, especially with support levels around $15 to $16.
So for people who are okay with a little more risk, there might be some opportunities for swing trading, aiming for somewhere between $20 and $22.
Exactly. But you have to remember a stock that's growing this fast can be unpredictable.
Risk management is really important. What can investors do to manage that risk?
Definitely. Well, one strategy is phased entry, invest some now, then maybe more if the price dips a bit. That can help lower your risk. And stop loss orders, those are important too, to protect yourself in case the price suddenly drops.
So there are some short-term plays, but what about long-term? What's the outlook for Hesai over a longer period?
Well, Hesai is a leader in a market that's growing quickly. They're making a profit, they've got these big partnerships, and the demand for lidar is just going to keep increasing. All of that makes it a really interesting long-term investment.
Sounds like Hesai could be a good addition to a diversified portfolio.
Mm.
But what about the risks? We've talked about volatility, but is there anything else investors should keep in mind?
There are always geopolitical risks, especially with a Chinese company that's doing business globally.
Those global tensions can definitely affect how investors feel.
You have to be aware of those risks. But Hesai getting that deal with Mercedes-Benz shows they can handle these challenges. They've proven they can compete and be successful on a global scale.
So maybe investors who want to diversify could consider adding Hesai alongside other EV or ADS stocks. That way they can be part of the growth in self-driving cars, but spread out the risk a bit.
That's a smart strategy. It lets you invest in this exciting industry, but without putting all your eggs in one basket.
So it seems like Hesai has a lot of potential, both short-term and long-term. What they've done recently shows they're innovative, they can get things done, and they're in a good position in a market that's changing quickly.
Yeah, it's a company worth watching closely. They're pushing the limits of lidar technology, and their story is just beginning. Welcome back to Investing Talk podcast. So let's get into the technicals of Hesai stock. We talked about that big price jump, but what can the charts tell us about where it might go next? What can you as an investor learn from them?
I'm ready to dig into the technicals. What are some of the key indicators you're looking at, and what do they mean for our listeners?
Well, let's start with the moving averages. If you look at Hesai's trading range before this recent breakout, the 50-day simple moving average, the SMA, it's probably going to be around, I'd say, $10 to $12. The stock's trading at, $17 to $18 right now, way above that 50-day SMA. That's a good sign. It confirms this upward momentum we've been talking about.
So we're seeing a clear break above a key indicator that points to a bullish trend. What about the long-term trend? How does that play into this?
Right, so the 200-day SMA, that's probably somewhere between $8 and $10. And again, the current price is higher than that long-term average. This really reinforces the idea of a strong upward trend. Breaking above both the 50-day and 200-day SMAs, plus that high trading volume we saw, it's painting a very bullish picture.
It does seem like the technical indicators are backing up all that positive news and those strong...
One thing to watch is the relative strength index, the RSI. With that 50% jump in one day, the RSI is probably in overbought territory now. That could mean we might see a pullback, some traders taking profits.
So maybe some short-term volatility as things settle down, but the overall trend still looks positive. How can investors handle this potential volatility?
Yeah, that's a good point. Now let's talk about support and resistance levels. The $15 to $16 range that used to be resistance, well, now it's acting as support. That's a good thing. It means buyers are coming in at that price point.
Okay, so if the stock dips down toward that 15 to 16 range, we might see it bounce back up from this new support level. How can investors use this information to plan their trades?
Exactly. That's definitely possible. And looking up, there's resistance around $20 to $22. Those levels are like psychological barriers. Plus, they line up with some analyst price targets. If the price breaks through that resistance zone, that could mean it's heading even higher.
So even after the recent climb, there's still potential for Hesai's stock to keep moving up. For investors looking to buy in, where are some good entry points to consider?
One more indicator to think about is the volume-weighted average price, the VWAP. With that fast price jump, the VWAP for March 11th is probably below the current price. So if the price pulls back toward the VWAP, that could be a nice buying opportunity.
It sounds like there are some entry points for both short-term and long-term investors, depending on their risk tolerance and how they like to invest. Based on this technical analysis, are there any specific trading strategies you'd recommend?
If you step back and look at the big picture, Hesai's chart pattern looks like a classic breakout pattern. We had a period of consolidation, then that big surge in volume above the resistance level. This kind of pattern often means the price could keep going up.
That strengthens the idea that Hesai's stock could continue to climb higher. So how can investors take advantage of this potential?
Let's talk strategies. For traders who like to be more active, waiting for a pullback to that $15 to $16 support level, or the VWAP, might be a good idea. Setting a stop-loss order below $14 could help limit your losses.
That way, you're protecting yourself but still giving the trade room to work. What about investors with a longer time horizon? What strategies make sense for them?
For those long-term investors, the ones who believe in Hesai's story and are okay with some ups and downs, they could buy at the current price or wait for any dips. Hesai is a leader in the lidar market, they've got strong partnerships, and that points to some real long-term potential.
But risk management is always important, even if you're thinking long-term. What are your thoughts on that?
Absolutely. Diversification is key. Pairing Hesai with other EV or ADS stocks, like we talked about before, that helps manage risk while still letting you be a part of the growth in the autonomous driving sector.
So whether you're a short-term trader or a long-term investor, understanding the technicals of Hesai's stock can help you make better decisions. But we have to remember, technical analysis is just one piece of the puzzle.
Yeah, a well-rounded approach is important. Think about the company's fundamentals, the trends in the industry, and of course your own investment goals and how much risk you're comfortable with. All of that should factor into your decisions.
We've covered a lot in this section, from Hesai's amazing performance to the details of their stock chart. Any final thoughts before we move on to the bigger picture of Hesai's success in the next segment?
His eye story is a really interesting one. They're at the cutting edge of this game-changing technology, and that recent breakout, plus those positive technical indicators, all that suggests there's more growth to come. But like with any investment, you need to be balanced to recognize both the potential rewards and the risks that are always there.
That's a great reminder. In part 3 of our analysis, we're going to step back from the numbers and talk about what Hesai's success means for the future of lidar technology and its impact on the automotive industry. We'll explore those questions in our final segment, so stick with us. Welcome back to Investing Talk Podcast. We've spent some time digging into Hesai Group's impressive stock performance, their big deal with Mercedes-Benz, and all those technical signs that point to even more growth. Now, I want to step back and think about the bigger picture. What does Hesai's success tell us about the future of lidar and how it's going to shape the car industry? What does it mean for you, whether you're an investor or just someone interested in how transportation is evolving?
When you look at Hesai's journey, it's really a reflection of how the whole lidar industry has been changing and growing. It shows just how far lidar has come, how much cheaper it's gotten, how much better it performs, and how much easier it is to integrate into systems. I mean, just a few years ago, lidar was this niche thing, mostly for research and development. But Hesai, along with some other companies, they've really pushed to bring down costs and make a lot more of these sensors, which has made lidar a real possibility for everyday cars.
It's almost like they figured out how to turn this high-tech luxury feature into something that's affordable and accessible for everyone.
Yeah, you could say that. And that Mercedes-Benz deal, that's a really big sign of that shift happening. It shows that the car industry is starting to see lidar as a core part of the next generation of vehicles, not just an extra.
So LiDAR's not just for self-driving cars anymore. It's becoming a part of advanced driver assistance systems, making cars safer and smarter in general. What does that mean for the average person behind the wheel?
It means better safety features. Things like adaptive cruise control, lane keeping assist, automatic emergency braking, all those systems that rely on sensors to work properly, well, lidar makes them even better.
So we're not just talking about cars driving themselves, we're talking about a move towards a safer and more automated driving experience for everyone. How soon do you think we'll start seeing these changes in the cars we drive every day?
Right, exactly. And as lidar keeps getting better and cheaper, we can expect to see it in even more cars. It really could become as common as airbags, just like Hesai's CEO said.
It's a bold statement, but given how fast this technology is developing, it might not be that far-fetched. But what about the competition? Hesai is a leader, sure, but there are other companies out there trying to grab a piece of this growing market. How does Hesai compare to its rivals?
Oh, there's definitely more competition coming, but Hesai has a few things going for it. They focused on being cost-effective and being able to produce a lot of sensors early on, and that's given them a solid base to build on. Plus, they have those partnerships with big car companies, both in China and now globally. That gives them a real edge when it comes to reaching more customers and getting their products out there. And on top of that, they're always innovating, trying to stay ahead of the curve, which is really important in this fast-moving industry.
So it sounds like while competition is inevitable, Hesai is in a strong position to keep its lead. What are some of the key areas where they're innovating, pushing the boundaries of what lidar can do?
Yeah, they're not just sitting back, they're always working on new ways to use lidar, making it better, finding new applications. For investors, that's a good sign that they're thinking long-term, thinking about growth, trying to stay one step ahead.
It tells investors that Hesai is not just a flash in the pan. They're here to stay, and their growth potential is huge.
That's the takeaway, really. Hesai, they're not just a stock. They represent this huge technological shift that's changing the whole car industry, maybe even how we live and move around in the future. And that makes them a really interesting opportunity for investors who are looking for companies involved in these disruptive technologies.
It's an exciting time to be following this industry for sure. For anyone who wants to learn more about lidar and autonomous driving, there's a ton of information online and in industry publications.
Yeah, it's a fascinating area that's changing so quickly. Staying up to date is key, especially if you're thinking about investing. Doing your own research can really help you understand these companies and the technologies that are driving all of these changes.
We've covered a lot of ground today, from Hesai's financial success to the impact lidar technology is having on the world. I hope you found this deep dive into Hesai Group informative and useful.
As always, we encourage you to do your homework, think about your own investment goals, and how much risk you're willing to take. And it's never a bad idea to talk to a financial advisor before making any big investment decisions.
And that wraps up this episode of Investing Talk Podcast. We really appreciate you joining us for this discussion on Hesai Group. Don't forget to subscribe to our channel, give this episode a like, and leave a comment below with your thoughts on Hesai and the future of lidar technology. Thanks for listening, and we'll see you on our next episode.